Welcome to the Bullhorn. Happy to have Howard Lindzen live in the flesh here in New York. And we're going to talk about, amazingly enough, you think that maybe the market has bottomed out.
Yeah, last week, I rarely do this. You know, I was not bearish, but I was definitely for the summer telling people to be out of stocks. And all of a sudden last week, it just felt, and I wrote about it, you know, it felt like a bottom, and I wrote, what does a bottom look like? And it was today, and that was on October 4th, and we've run 1,100 straight points. So I don't think people should chase, and I don't think there's tremendous setups, but I think it just got so bad that people were tired of selling.
Right.
I really do believe that you're not going to see 2008 type bottoms again. I think people just have that memory of it, so they think it can happen again, but that I think is what's going to prevent it from happening. I think Apple is a case in point. Steve, unfortunately, we lost Steve, but this company is a juggernaut.
Right.
And although I think Apple will struggle because they're going to have an identity issue, I think the company's set up beautifully with retail, with the iPhone 4, thinking about voice, you know, thinking about software, that they're fine.
We talked a lot about Jobs and his legacy and Tim Cook in last week's show. Since then, I found it interesting that Disney, a company that is now closely intertwined with Apple, Bob Iger, who's been a great CEO for them, and I'll admit it, Disney's a competitor of ours, but that's been a solid company. Iger announced that he's going to be stepping down in 2015, and they're getting a succession plan in place. They haven't named who it's going to be yet, but are you surprised that more companies aren't so proactive, like Apple, like what Disney is doing now? I mean, you look at the chaos they had in Yahoo and HP. So many companies just don't seem to plan for succession.
Well, I think that's because of greed, and that's because of the way the boards are structured nowadays. I don't know if boards have as much pull as they used to be. Boards are now more structured around image and around maybe not so much fit as they are around what's going to help the company go faster. And I think what we've learned from this downturn is, like, these boards, whether it's HP with Mark Andreessen, these guys don't have all the answers, and they're conflicted up the wazoo like everybody else.
Right.
Conflicts exist. So I think, Disney's move is to say, listen, what Steve Jobs did, if you look at the stock of Apple post-Steve Jobs, it's right where it was. Wasn't Apple supposed to crash 50% post-Steve Jobs? So I think a lot of CEOs are going to look at that and going, wait a minute, they lost Steve Jobs, and the stock is now up a week later.
Right.
Okay? We need a plan like that.
Getting back to the whole notion of the market possibly bottoming, we're still seeming to be in this cycle where we've had decent earnings and it doesn't matter. Economic numbers in the U.S. don't seem to matter. Everyone is so fixated on Europe. I mean, I've been writing about the markets and economy since 1995. When I started doing it, I never thought I'd see a day where I'd have to give a damn about what the Slovak parliament was going to do in terms of market direction on a day-to-day basis. Do you think the focus on Europe, not to minimize the European debt crisis, is too much, that we're obsessing way too much on Europe, or we really need to get a resolution, if it's good or bad, with Greece and the rest of the pigs before we can kind of move on and get back to looking internally at what the U.S. economy and earnings are going to be like?
Well, it's a great question. Here's the way I look at it. Who cares? I look at it as who cares. Europe's going to do what Europe's going to do. The fact is, it's become page one news. Okay, the market has had every chance to tear this news apart. I got to think that 80% of this, mentally and mathematically, is priced in. There's outliers left, but the market started to care 2 months ago. It's had 2 months to correct. I can't predict if it's over, but I can tell you that it's front page every day, 24/7. The news that really is going to move the market is on page 10, moving towards page 10 right now, and maybe that news is positive news, whether it's that Apple didn't crack, whether it's the iPhone 4 is just another wave of innovation, whether voice becomes now a new thing, whether maybe page 10 is about what's going to happen and it's all going to be positive for the next 6 months. So I think you got to look at Europe and go, man, I'm sick of page one. The market's sick of page one. That's why the market bottomed a week ago. We're holding our breath. You have a really good line in the sand right now of where if we break those lows, it could get ugly. But in the meantime, start thinking about ideas that may start doing well.
Right. Well, I hope that you are obviously correct, that the market has bottomed and we can move past this Europe obsession that the market seems to have these days. Thanks, as always. Look forward to doing it again next week.
Thanks, Paul.
Thank you.